there is a likelihood of a movement towards something that is more political and more fiscal than it is towards monetary. I think the EU will change, but I'm not sure what format it'll take. I don't think it disappears entirely. The thing that's going to press this button is the European banks, and I think it's Germany with Deutsche Bank and Commerzbank at the heart of this.
Welcome back to the Lance Roberts Show today at realinvestmentadvice.com. Our special guest, Raoul Pal. He is the head of realvision.com and their new free service, realvision.com/free. Raoul, just before the break, we were talking a little bit about interest rates, how potentially in this upcoming recession, they're going to head towards zero. Markets don't seem to be buying a recession's coming no matter what I look at. It's like no recession in sight. But I find it interesting that if we take a look at central bank activity, really both globally as well as domestically, there are some changes afoot that may have real implications for investors. Of course, the first is Christine Lagarde. She is currently the head of the IMF, potentially going to be a replacement for Mario Draghi at the ECB. Of course, Donald Trump just recently saying that the head of our Fed should be Mario Draghi of the ECB. What are your views on that? I mean, more zero interest rate policy, more QE from the ECB?
Interesting enough, I was hosting a Goldman Sachs event, the Goldman Sachs Macro Leaders Forum in London about a month ago. And I managed to get the ECB along to the event to come and talk to us about this. And obviously, they don't want to give away a lot, but it was very clear from my discussions with the ECB that, you know, they had a bit of more of the same was on the agenda, so they could cut interest rates, which Mario's been talking about already. Right. And they've been talking about a bit more QE. But the problem is they already own a large part of the bond market. So there's a limit to what they can do. So I thought the new appointment, or the new potential appointment, was interesting because she is basically a lawyer and a politician. So that tells you that there is a likelihood of a movement towards something that is more political and more fiscal than it is towards monetary. Because I think the whole MMT idea, or even what the Japanese have done, which is getting more extreme with their policy, is going to require a political lift to do it, and also legal constraints of what the ECB is able to do and not able to do. So I think it probably shifts the focus on a different outcome. She's already talked about the Germans not spending enough money and not doing enough fiscal stimulus. So I think that is going to be a big part of the equation. So it's going to be more monetary stimulus in a different way. And she's the person to spearhead it. And that kind of makes sense.
Well, you know, it's interesting that you brought up Germany, because this is a question I've had for quite some time, is how long can the European Union as a total really count on Germany being the checkbook for most of the stuff that they're doing? You know, it's always comes back to Germany. They're not spending enough. They're not doing enough. But yet they foot a big chunk of the bill. And, you know, their economy is slowing down. They've got problems with immigration. They've got issues that they're dealing with there. Manufacturing is a lot weaker. It seems at some point there's a difference between the European Union and the United States. You know, they're a loosely linked union of countries. And it seems to me that at some point the economic situation, the pressure may get to the point that it disrupts a lot of this idea of the union. And you see more of a fracturing of the union, as we've seen potentially with Brexit.
Yes, there are. It's weird. I lived in the heart of Europe. I was living in Spain for 10 years. And what's really interesting is we get a lot of comments from the UK and the US about Europe fracturing and, you know, a distrust of European system. When you're actually at the heart of Europe, you don't get that at all. People just aren't that anti-Europe. So at a population level, less so. There is all these countries have issues with slow growth, high debt, aging populations, large immigration that they need to digest within their overall population. So there is a change going on. There is another change, which is some of the smaller nations are trying to splinter. So whether it's Scotland trying to splinter from the UK, or whether it's Catalonia from Spain or the Basque region from Spain, there's a number of these particular situations, but none of those are kind of anti-Europe. So I'm not sure what the outcome is. I don't think Italy is more concerning, and I think Greece will get fed up in this whole environment. I think the EU will change, but I'm not sure what format it'll take. I don't think it disappears entirely.
Well, and I certainly wasn't implying that the European Union would disappear, but I guess my question was more to the point of, you know, at some point, when does Germany say, I've got to take care of myself first rather than funding, Italy, Spain, Greece, wherever else. It seems at some point that focus has got to turn back towards more or less a nationalistic type view of protecting one's own sovereignty, right?
Yeah, I mean, Lance, I think the thing that's going to press this button is the European banks, and I think it's Germany with Deutsche Bank and Commerzbank at the heart of this. The European banking issue is still unresolved. The biggest banks in Europe are now under pressure. I also look at SocGen, I look at some of the big Spanish banks, and even some of the Swiss banks like UBS and Credit Suisse, and they don't look good. But Deutsche Bank is the epicenter of all of that, plus some of the peripheral Spanish and Italian banks. If Germany has to bail out Deutsche Bank, that is the new phase where Germany has to do things for its own self.
Right.
And they will even force potentially a restriction of the bail-in laws that they forced on other people. And that's going to create problems with Greece because they got bailed in on their banks, as did Cyprus. So, yeah, all of this is to come, and I think it's coming soon.
Well, Raoul, I had to chuckle a bit when you just listed some banks that you feel have some issues, because the Federal Reserve just passed all the major banks to be financially sound, even under the worst financial conditions. Deutsche Bank, one of those that was actually passed on the stress test and allowed to issue more dividends and buy back stock. But, is that really the case?
Look, the share price tells you everything. And I've been commenting on this for 7 years, the relentless grinding lower of Deutsche Bank's equity. So much so that now, it's not clear whether they have enough equity in the business to run it as a bank. And so obviously they're trying to, and we saw this back in 2007, 2008 with the banks. They're trying to find partners for them because these are toxic messes. But putting together Deutsche Bank and Commerzbank is just stupid, because you're putting together two toxic messes and hoping it goes away. Did they create a bad bank? Well, that's another way. And Spain tried that, and Italy have tried bits, and other people have tried it. But it's not going away. You can't sweep this under the carpet.
Right. Well, and again, I think that's interesting because, we've done a lot of things here in the U.S. If you take a look at U.S. banks, yes, they look healthy. Of course, we repealed FASB Rule 157, which was mark to market back in 2009. That still has not been reinstated. And we take a look at the trillions of dollars these banks received in bailouts. Of course, they should be in better financial condition than they were then. But it still doesn't solve the issue that when you get into another financial situation, and again, we take a look at leverage loans as an example, 1.5 trillion in leverage loans versus 600 billion in subprime mortgages. You can't tell me there's not risk to the balance sheets of these banks.
Well, interesting enough, I've spoken to a bunch of people about this, and I think the actual risk is in the pension system. When we're talking about credit, which I think is the big issue, the triple B credit market of 4 trillion versus $1 trillion of junk bonds, if any of that gets downgraded, plus you've got the leverage loan stuff, any of that goes wrong, the owners of all of that is the pension system. Because the pension system took out excessive leverage to try and plug the black holes that they've got from the underfunding. So that's what I really worry about. The banks don't have so much on the balance sheet, I think.
Yeah. Well, I think it's interesting because you bring up the pension funds, of course. The banks you're buying a lot of toxic debt, prior to the 2008 financial crisis because they were trying to create the returns. And you're absolutely right. We've got a $4 trillion underfunded gap in pension funds because they've depended on, excess rates of return they haven't been able to achieve. They've loaded up on a lot of toxic stuff. And my big concern is like yours, and I think this is the one thing that everybody overlooks is that, yeah, we might have a small recession. The markets might go down, 10, 15, 20%. They forget that we have a massive number of people on the verge of bankruptcy that are tied to some of these pension systems. And if they get scared and you get a run on the pension, that's something you're not going to be able to fix without major government bailouts.
Yeah, so my view on this is these triple Bs, so people like AT&T, maybe Ford, General Motors, Dell. There's a bunch of these gigantic triple B companies. Somebody's going to get downgraded, and it's going to go into the junk bond market, which is going to freeze up.
Right.
And that's going to cause a huge problem in the pension system. Additionally, we've got the retirees, the baby boomers, all hitting 65. And those guys are natural sellers of equity and not buyers. So you have a sellers-only market that could happen, and that would be a big mess for the pension system. So my view is this time around, the kind of TARP QE style event is going to be underwriting the pension system and not, because that plays better to voters than giving money in QE to bankers. So I think that's where we're leading to.
Yeah, exactly. And that's why I'm starting a pension fund. just so I can get bailed out. We'll be right back with Raoul Pal. He is the head of realvision.com. Of course, as I said before, one of the greatest services that you can, subscribe to understand more about what's really happening in the markets and your money. That is really kind of the new version of what financial media should be. And they actually have a free service out now for you as well. realvision.com/free. Go check it out. It's the best thing you'll do for your money. I'm your host, Lance Roberts. We'll be right back after the break for more of the Lance Roberts Show podcast right here at realinvestmentadvice.com.
You can get daily real investment news you can use, delivered at the speed of the internet. Sign up for Lance's newsletter now at realinvestmentadvice.com.